Great. I just want to welcome everybody today. People are still being let into from the waiting room because we've got a full house today. Nearly 300 people signed up for this webinar. So welcome to Financial Survival for Entrepreneurs. We're really excited about this webinar today, and it looks like you are too, because a lot of people have signed up. So I just want to introduce myself. Hi, everyone. My name is Cathy Burrell, and I'm an entrepreneur in residence at WeBC, which means that I've had a business before, so I understand financial survival at a clothing store for 18 years in the Lower Mainland. Before we begin, I just wanted to acknowledge that we're gathered here today on the traditional and unceded territory of the Okanagan Syilx people. We recognize, honor, and respect the presence of Indigenous people past, present, and future. And if you're not sure, what land you are on, Brandy's going to try and share something in the chat that has an Indigenous sort of land map. Or if any of you would like to kind of just go on the chat and say hi and where you are in BC, we'd love to know that. These webinars have participants from all over BC, and we're branching out a bit, and we've had people from Alberta and people from Ontario join us. So just as long as you don't mind the time change, it's good. I want to just also mention a few things that we offer here at WeBC. So we offer support for your small business journey. We offer financing to get businesses started and operating capital to fuel your growth. We offer more flexibility than traditional lenders because we take a holistic approach and provide loans based on your business's viability, not based on formulas. So this means we provide loans to a diverse range of women-owned businesses and support you with integrated services, including complementary training, mentoring, and business advising. So if I were to mention one thing that would mean that maybe you would apply to WeBC for a loan before someone else, it would probably be that extra piece. If you were to get a loan with WeBC and the term would be for 5 years, for 5 years, we would offer you complimentary business advising, training, and mentoring. So that's pretty fantastic. From its essential business skills development to personalized business advice, we know the right questions to ask and the right resources to connect you with. In our mentoring programs, you can connect with a network of women entrepreneurs and experts all around BC who can support and inspire you. So I know that the majority of people today are on this webinar because they do get our e-blasts. But if anybody else it hasn't signed up already, you can go to our website and sign up for our e-blasts, and each month you'll get an email from us, and it will list all the webinars and seminars that we're doing, and oftentimes you can sign up right from that email, which is great. In our mentoring programs, you can connect with a network of women entrepreneurs and experts around BC who can support and inspire you. And you can learn more about our services at our website, which is we-bc.ca. And of course, sign up for our e-blast to get notified of new programs as we have a ton of great offerings coming up. So today's webinar. As your business grows, so does the complexity of managing its finances. Whether you're managing expansion, optimizing cash flow, or navigating the world of finance and taxes, this session will help you stay on track for long-term success. And really, that is the name of the game for most people that start a business. Today, we'll explore the financial practices every growing business needs to survive. So without any further ado, we'd like to welcome today our panelist, Chad Chang. Chad owns a company called Purpose CPA. Brandy, you can, I guess, stop sharing my slides and start sharing Chad's. And I'd just like to welcome Chad, everybody.
Great. Thank you so much, Cathy. I'll get my screen share going here. Awesome. And can everybody see that? Great. Okay. Thank you so much for that introduction, Cathy. Thank you, Cathy and Brandy, and the WeBC folks for having me here today. Thank you, everybody, for attending. Big roster list, and very excited to talk to you about some tips and tricks that I see from the accounting and the finance side to help you with your business. Certainly, we're in a time of financial survival. The headline numbers that I watch, they seem that Canada is in a malaise. There are indications that business environment is low productivity and lower dollar throughout Canada. So there's certainly a survival element to it. But at the same time, I'm very hopeful. There are a lot of matters that I still see with our clients. Business is still running, and there's still a lot of activity that's out there. And hopefully there's a lot of tips here that you can pick up and employ in your business to elevate that business and to grow the Canadian economy with your input. I'm one of the co-founders with Purpose CPA. I have 25 years of throughout my career, and became a CPA in 2011. And that has continued on to where I practice in leadership roles throughout companies, controller roles, director of finance roles, CFO roles, and then decided to break out on my own. We take a 360 degree view towards business performance. That also takes into consideration people's health and also the community. Not working yourself to death, not working the 60, 80, 100 hours or anything like that. We definitely try to find that balance so that people can continue to employ their craft, their trade, the things that they're really, really good at, the things that people want to pay you for, and to also find the right balance so that they can have a long career with their business. With Purpose CPA, we're a full service accounting firm, but what really differs us is that we're digital first, and we operate a lot of technology, and we employ the latest in technology in our businesses. We're also business partners in the sense that before operating an accounting firm, we've worked in industry, we've worked in businesses, we've been there in the roles of being in sales, being in health and safety, being in HR, payroll, marketing, and I still do those functions throughout my business. So we bring a lot of that that know-how and that hands-on experience working with business owners, not only with their accounting, but also in the operations of the business. Today, I want to thank and honored to speak on the unceded territories of the Musqueam, the Squamish, the Tsleil-Waututh, and the Quetzalcoatl nations in my area. I am physically located in Burnaby, British Columbia. Oh. All right. Today's presentation, I've crafted our presentation. This is I believe my second time speaking with WeBC. I did another webinar last year with WeBC, and very proud to speak with WeBC because part of our organization is that we are also impact oriented as an organization. We do get out to the community to speak with all sorts of different groups, WeBC included. Black Business BC is also one that we speak with. Small Business BC is one that we also speak with as well. And so I'm gathering information about our target audience, and based on the outreach and also our community engagement that we have, Our target audience tends to be entrepreneurs who may be in the early stages, or they've started their business maybe 3 to 5 years into their business. But I still think that there are some information within our presentation that could apply to business owners and entrepreneurs that have been operating for much longer than that. Our presentation content today is about scaling. It's about some of the financial metrics that will be helpful to look at, and also metrics that I think other stakeholders will be interested in such as lenders. And then the last part of our presentation are some of the best practices for the assessment of the business. And we'll talk a little bit about more. But before I jump into that, I'd like to launch a poll to get a sense of my audience. So I'll have poll number 1 up. If I can have people just let me know, what stage of a business are you in? Pre-business registration, you're thinking about it. Are you a sole proprietor, a type of business? And this is the type of structure, the legal structure. If you're unsure, I can explain. When you register for a business, there's really about 2 types of structures, which is a sole proprietorship. You still register for a business with a provincial body, but it's not a legal incorporation, which is fine. And then there is the legal incorporation where you register also as a business, but the legal incorporation tends to usually mean that you speak to a lawyer, you definitely speak to an accountant, you set up things such as your shares, and you have a legal entity. This entity that represents you as a business, typically more cost that comes along with it. Great. And then we have closed or looking for a new business venture, and people are sure. Okay, fantastic. Okay, fantastic. We have 100% answered. Thank you so much. So we have a good balance of some in pre-business registration. We have a good balance of sole proprietors and also incorporated business owners here. Fantastic. So I'm just going to show the results there. Okay, great. Yes, so as mentioned before, our agenda, the takeaways that I have today is considering some strategies to scale the business. Some of the things that I see from an accounting side and also from a leadership side that are elements that I find that are very helpful in scaling the business. As an individual, you're always stretched for time, and I wanted to share a couple points to find that way of scaling the business so that you're not always feeling like your eyeballs deep in things to do. Second is financial metrics that matter the most. We'll talk a little bit about those. It definitely leads into business health and financing options that we should look at. And lastly, it is best practices for minimizing taxes and compliance. And there's also a little bit in there in terms of financing and how to approach financing. What are some of the financing that's available for business owners? Oops. All right. Before I jump into scaling your business, I see a lot of participation. We're going to launch poll number 2. I'd like to know a little bit more about my crowd.
Sorry, just give me 1 second here.
Oh, no problem.
There
we go. If you are a business, how long have you been operating? Excellent. Excellent. A lot of people responded. Yes, yes. Excellent, great. Yes, we predominantly we have businesses that are are new. You've been in operations for up to about 4 years. About a third or less than a third have been in operations for about 5 to 10 years. And we have about 10% of the participants here that have been operating for more than 10 years. So fantastic. Thank you so much for sharing that. Great. Strategy to scale. When you're looking at looking to build your business, everybody is looking to build their business and grow their business. You're certainly looking to start out by understanding your market, your customers, your product, your competitors, and regulatory. This is essentially forcing you to build a business plan, or at least have it in your mind of how your competitors compete, what your competitors want, the products that you're selling, how does it differentiate from other competitors, the competitors that are out there, how many competitors are there, and what are they doing right and what are they doing wrong, plus also as well as the regulatory environment that you're in. So we have some clients who sell products, who make products, retail products. One of the clients that we have is in retail, and they make custom team jerseys. It's taken them a long time, and the business owner is also a friend of mine. They started the business back in early 2010. And he admits that it's taken about 10 years for him to really understand the market, the customers, and how to produce the products that his clients and his group of people really like. So understanding these matters at the very beginning, you don't have to understand it all. It's very hard to. It'll take some time to get it. But I always find that I'm always assessing the market, the customers, the product or the service, how that service delivery or how that product delivery is produced or made. And I'm also assessing regulatory environment. This can be done through a SWOT analysis and also a PESTI analysis. I won't get into those here, but if you do search up SWOT analysis or PESTI analysis, you'll find lots of material on the internet. And I'm sure WeBC, Small Business BC, those agencies certainly have some tools for those. But it's good to formulate this in your mind so that it will help you in the later part. Know your superpower. My superpower is, and this has taken me some time to identify, but my superpower is that I'm able to stay on top of many different things. And I've developed a memory for what are the things that I have to do, the critical things that I have to do, and when do I have to do it, so I can manage multiple projects at the same time. I'm also an individual that is dominant in terms of my personality type. And I also am an individual that likes information. So communication also for me is very important. And I feel that I could be better. They're probably far better communicators than I myself out there. But when I communicate, I like to communicate with a lot of information. I also like to receive a lot of information so that I can plan. A big part of all that is that I'm also very strategic, and I also like to strategize. So my mind thinks in projects, strategies, priorities, and that's my superpower. And the importance of knowing your superpower is that we'll get into a little bit later, is that there's so many things for you to do knowing your superpower and what people will pay you to do and what you enjoy doing, that's where you're going to be at your optimal. To be able to run your business, you want to be at your optimal energy. You're well rested. You're happy to show up to work, and you deliver that that quality of work and that positivity of the work to people, and people will pay for it. So knowing that and staying there is a big part of understanding how to scale. I'll dive into a little bit of a time cost right now, and you'll see how it all brings it together. Understand what your time cost is. Remember, going back and thinking about understanding your market, your competitors, knowing what you're really good at and what people will pay you for. You can start to figure out what your time cost is. And I say that business owners, their time cost should be high. It doesn't have to be high to start off, but it should be high. Set your time cost at, say, $100 an hour. As a business owner, you're taking on a lot of risk, and you have a lot of activities to do, but with so little time. And your time cost, I argue, should be high. You should continually try to increase your time cost, because by knowing your time cost and knowing your superpower, you're starting to see that, I can't get to it all. And you'll have to also hire other people or outsource that work or that task to other individuals, so that you can continue to deliver the high level of the business, the type of product or service of the business to the people that will pay for it. So establish your time cost, understand what that is, and then you're able to consider if there are other people or other services that are out there that deliver that particular task that's outside of your superpower or your knowledge of information. Then if they are at a lower cost per hour than your time cost, that is something that you should jump on. So you should outsource when external providers' cost is lower than your own time cost, or when you do not have the skill or the time to learn and employ those skills yourself. So I have business owners who are shy about when they provide their accounting to us or their books to us, and it's very common that I hear that, oh, my books is not in order, and I never give them grief or never give them guilt or anything like that, because that's not their skill. That's not their superpower. Their superpower was in being able to sell their product or their services, knowing what that was and what that is, and also being able to develop or to create that product, whether it's a widget or that service, whether it's drywalling. They're really, really, really good at that. And if you don't have that skill or the time to learn that particular skill, it's okay to outsource it to another party. This is building on the same idea of your time cost and comparing it with a potential alternative or an option. This is the unit cost versus investment. This is particularly useful if you're developing a product or if you're selling a product. Unit cost could be what it takes for you to take materials, put it together, also the labor cost with it, and then be able to sell it. And this is a very, very important one to consider, to really understand your unit cost per production and whether or not you have the right machinery to produce it or to be able to facilitate the order. You may just take an end product, let's say like, say for example, the retail store, the sports retail store that I had earlier on. They take a lot of shoes, basketballs, volleyballs, those items from the suppliers, and then they resell it. And they have staff as well as a website, Shopify, that they run on to be able to sell. And that's their machinery to be able to sell on. You want to understand what additional costs of your machinery or your delivery device that will sell your particular product, and whether or not that that machinery or that delivery device, that the cost of it is at an optimal, is it the best cost that's possible. Calculating this can take some time, but you want to try to think about, how do I invest in something, in a machinery, or whether or not that machinery is, whether it is the most optimal in its cost to deliver the products that I'm trying to sell. How I go through cost per unit analysis, and we'll get into a little bit about the some of the cost that goes into the products, but you certainly want to start by looking at the direct and indirect costs. Direct costs are all the materials that actually go into that product. So if I'm selling a custom shirt, the direct cost would be the unprinted shirt, would be the printing materials, and the labor that goes into developing that one particular shirt. Indirect costs are all the other costs that goes into running the business. So that's all your insurance, the utilities, the security to the warehouse that you have. Those are all important to also consider as part of your costs. Identify the total number of the units produced, and you calculate the cost per unit. And you want to compare that cost against your industry benchmarks, and as well as your competitors. How do you stack up in terms of your product? If it comes in higher, will people pay for your higher product? Does it deliver the value that people will say that, you know what, I'll pay more for your particular product? Or are you delivering it at a lower cost than your competitors? Fantastic. If you're delivering the same product at a lower cost than your competitors, you're at a win-win, you're in a win situation. Next is about building your standard operating procedures. And standard operating procedures, it could be steps into how you deliver your product or your services. And you want to build this because when you're delegating out the tasks, you want to show people that what are the steps involved to deliver that particular product or service. In building standard operating procedures, there are templates that are out there, so it's easy to do. And I even recommend jumping onto ChatGPT, using the AI these days to help you build out steps. It doesn't have to take long. It can be very simple steps, but when you're delivering your steps, consider what the person does, that individual that you'll delegate out to, what happens if they run into an issue, and also whether or not there's any escalation or approval situations. So again, that would be how to do it, what happens if there are problems, if they run into issues. And such things could be adding some policies in there, such as there might be privacy regulations. If customers, if you're requiring customers to provide their IDs, for instance, how should they go about it? How should they handle that ID? And lastly is escalation. What happens if they run into an issue? where a customer, you may have to resort to a manager or resort to another colleague for information. But building out your SOPs is going to be very helpful because ultimately you'll want to think about delegating and having a leadership style to be able to delegate the work to your staff, to your employees, and to even perhaps contractors that may help you develop grow your business. I take a firm belief in right person, right role. There are there are times where you're unsure about the individual, and it happens to everybody, developing the role and developing the SOP is one thing, but then having that individual fill that particular role in those tasks is another thing. So certainly definitely to look in your leadership style and take some of these elements as part of them and employ them, but also consider that working with people will take some time to get them up to speed. Certainly consider probationary periods for new individuals into the roles, see how they fit, but certainly think about right person, right role. I also feel that there should be some patience when you're putting a person into a role, but at the same time, there are some times where you feel that the person may not be the right fit. And this goes back to understanding your processes and understanding your business and what it takes to deliver at the quality and also the level that your customers demand. After building out your statement of operating procedures, your SOPs, you should have a really good idea of their role, and then having the person into that role. If the person is not a good fit, have that individual also perhaps consider for a different role. It's important to definitely develop the leadership style and also finding the right individuals to place in their roles to help you grow your business. Great. Before we dive into the financial metrics today, I want to just have one more poll and learn a little bit more about my audience here today. Our last poll, number 3, how many employees are in your business, including yourself, employees? And this is, you can also consider contractors too, if they are also part of the people that work with you. But typically, I want to see by employees. Okay. Awesome. Okay, we have a good balance. About a third are solopreneurs. We have about a third that are solopreneurs but have some contractors. And then we have about a third that are up to about 10 employees and one individual with more than 10 employees. Fantastic. Thank you for sharing that. Thank you, everybody.
Chad, it's Cathy, the facilitator. And somebody had a question in the chat that was pretty specific. They were asking like where you learn about leadership styles. Do you have any resources that you can share or anything like that on leadership styles?
One that I tend to see quite often, and the one that I practice because it's also brought into the school for my daughter, is the 7 Habits of Highly Successful People by Michael Covey.
That's an oldie but a goodie. That's great.
And I think that applies for even if you're not a leader, but certainly qualities that you'll see in effective leaders too.
Yeah, and somebody's just saying in the chat too that it's Stephen Covey. Yes, Stephen
Thank you.
Covey, and it's PHEN, Habits of Highly Effective People. I think he's written a couple of books, so that's a really good one to have.
Thank you.
Thanks,
You.
Chad.
You're welcome. There are many, and understanding your personality type. There's a profile. It's called the DISC profile, and there's several profiles that are out there. But when I had gone through our accounting school, they required the students to also go through this profile. And that's how I learned about my profile and understanding the different types of profiles that are out there. It also detailed out where I'm strong at and also where I'm weak at in different quadrants. It's just my nature. And so that really helped me understand how I'm natural at, and also how do I, kind of augment my style, my communication style to fit with other people. So I think that's a good area to go with. But yeah, it will take time understanding yourself, putting yourself in different situations. Leaders that run businesses, other qualities that I would find that are important outside of personality. I would also say that for the strong businesses that we see, these are leaders that understand where they are not good at, and they really stay in their superpower. They know how to say no to lots of different things, and or understand where that they have help and support, where they can delegate those tasks to. Strong leadership also means that they're able to make quick decisions and stand by those decisions and hold firm on those decisions, as well as knowing when they are where some of those decisions are incorrect, and they can admit to those errors and they can course correct immediately and pivot. Other things that I see that are effective for leaders: quick decision making, really understanding their product and service and their market, their competitors, the regulatory environment, understanding those, and can communicate those to their staff in effective ways. So really, a lot of the slides, the earlier slides that I've identified, understanding your market, doing the PESTI analysis, understanding your business plan, and your superpower, and knowing how to delegate those information. Those I definitely see as common qualities in a lot of the strong businesses that we consult with.
That's great. Thanks, Chad. We've got a very lively group today, almost 111 people in the session, and everybody's contributing to the chat on leadership. So it's fantastic. This is great to take some notes, and thanks a lot. Sorry to derail you there.
Not a problem at all. Okay. Let's jump into some of the key numbers. We'll talk about some vital numbers that are good. It's vital to have key numbers because that's how you'll have the information, the data, for individuals that really like to have information, like myself. It's good to look at your numbers at least on a monthly basis. There's some prior period stuff to consider: budgets for coming year, competitors, data, data points. These are some key points to have and to consider. So let's jump into some revenue and sales. So sales, this is important because this is the top line of a profit and loss or your income statement. So this is how much that you generated in sales before sales taxes. And very important to see how you grow. What's even more important is the gross profit. is how much sales that you made less the direct costs. So that's the taking from the sports retailer. So all the t-shirts that I've had and all the people that I've employed to create that t-shirt into something new that I can resell, that's going to give me the gross profit. So gross profit margin is very, very important to know. Gross profit margin is widely published. You may not be able to see a gross profit margin for your competitors because they're a private company. They're like not going to show it or share it. But Stats Canada, you'll be able to see a lot of business metrics that are out there that are capturing the gross profit margins and sales information of many businesses altogether. And you should be able to find information of similar type businesses that you can compare to. Let's look at some expenses. There's operating expenses, admin, selling. These are all your overhead. So typically on the bottom half of an income statement or profit and loss statement. And this is everything that should go into that part of the statement to keep the business running. Your admin staff, your managers, the marketing expenses, the insurances, the utilities to keep the lights on, and those. Once you have that information, you'll be able to have your operating profit. And this is the profit that's earned from your regular business operations, less all the expenses and interest and taxes. You'll also see acronym, the earnings before interest, taxes, depreciation, and amortization. And this information or this EBITDA is found off the profit and loss statement, and it's usually used by lenders. But for business owners, your gross margin, your operating profit is a good start to know. Your net income before tax, and this is the bottom line. This is what's left after all the expenses and all the taxes and everything else has been accounted for. And net income before taxes, typically the amount that that you've earned in the business, that the business can retain. And of course, net income is the one that you'll always want to try to keep positive. And as long as it keeps positive, then your business is growing. Here we have the statement of financial position. Two things to look at. Statement of financial position talks about cash flow. It's the cash flow statement. And two things to look at in the cash flow statement, and it doesn't have to be in the statement, but two things to look at is very important for a business owner is your accounts receivable aging and your accounts payable aging. Accounts receivable is how much money that you've earned and people have not paid you yet. This is a report that you can pull up in any accounting system that's out there that will show you how much money is being owed and how long it's outstanding for. It could be 1 to 30 days, like 30 to 60 and beyond. And of course, you want to have a lower accounts receivable than an accounts payable. That means that more people are paying you right away than you're paying out with your accounts payable. A strategy, if possible, is that there can be delays of accounts payable depending on your vendor and depending on the relationship that you have with your vendor. Some vendors will allow you to pay after 30 days, or some will allow you to pay 60 days. Certainly speak to your vendors and take a look at late payment charges and even times where there's early payment discounts. And that can really help in trying to manage the money that is going out to address your accounts payable. Can really help in terms of making a difference between a profit and loss.
Chad, it's Cathy again. I just wanted to let everybody know we're getting a lot of questions saying that they love the presentation but they have questions or they have to go early. I just want to let everybody know that you're going to receive an email from WeBC later today or tomorrow with some resources, including Chad's contact information and including the slides from today's show, from today's session. So relax, everybody. It's handled. So I just wanted to let everybody know that. Thanks, Chad.
Great, thanks, Cathy. Okay, we'll jump into a couple of common ratios, what they mean and why they're important. We've talked a little bit about gross profit margin and operating profit margin. Two key ratios, and this is how you find those margins. These are very important to look at on a regular basis, and also the reason why we're talking about here is also these are very important to monitor, because if you're looking for lending opportunities, whether it's with the bank or WeBC or any other lending opportunities, this is one key ratio. Another ratio to look at is called the current ratio. It takes your current assets divided by current liabilities and it gives you a number. You want a number that is at least 1 or higher. That what it means is that you have a lot of assets and you don't have a lot of debt. And the lower the amount of debt that you have is better. Some lenders will want to see at least 1.5 or more in terms of your current ratio, and that debt, that current liability debt, also includes credit card debts typically. Quick ratio asset test liquidity. This is what it is. I won't get into too much details of it, but this is also one of those ratios that lenders will look at. And I wanted to post it here so that you know that if you come across it, if they ask you about a quick ratio or asset test ratio, you'll know what that is. And most accounting software that's out there, the ones that we use is QuickBooks Online. The accounting software will calculate these for you, so you don't have to know, you don't have to remember the formulas. Accounts receivable turnover, very, very important, especially for lenders. We talked a little bit about accounts receivable, keeping the money coming in fast. When they ask for the turnover, this is how it's calculated, and providing them with the data points from your accounting system, you should be able to calculate the turnover really quickly. And some systems that out there will calculate this for you. So again, you don't have to remember it. Debt to equity ratio. So this is the amount of the total amount of debt, the liabilities that the company has divided by the owner's equity. How much of the owner's investment, and as well as the retained earnings of the company that it has. Certainly, having a lower debt to equity ratio will be a better situation for you. Okay, let's, I think a lot of people have likely come here for the taxes, and we'll jump into the best practices to reduce your tax burden and ensure compliance. It's a large area, and there's certainly lots to consider, and certainly not enough time for ourselves to get into today, but I wanna let everybody know that there are corporate income tax rates, and there's a thing in our Income Tax Act, it's called integration. And there's a belief that people will have that if I open up a corporation that I will save more on taxes than if I just ran it as an individual, as a sole proprietor, unincorporated. And integration eliminates that. You do pay less in corporate income taxes. The combined total rate for the small business deduction in British Columbia is 11% right now. So that does seem low initially, but what happens is that after your corporation earns that money, it pays the 11% taxes on the taxable income, but it still has to pay that out to you as an individual. So when you take the money out, as the money lands in your hands, you essentially earn the same as if somebody just gave you that $100 profit and you reported that profit on your personal income tax return. Corporations and sole proprietors, in terms of the taxes, there are slight advantages in them, and I'd be happy to speak to the business owners individually to tell you about them. But generally, integration eliminates any advantages between the two sides. So there are things such as management fees and how to pay it out. There are rules around that. There's also rules in terms of income splitting. If you're deciding to have your husband and a wife be a part of the business, or how are you going to pay them for, let's say, living costs. There are rules to consider to avoid penalties and denials of expenses for income splitting. There's also deferring taxes with a bonus. There are strategies where you can initiate a bonus in the organization. It's a deduction to the organization in an incorporation, but you can delay in terms of how you report that bonus on your personal tax return and delay in paying the taxes at a much later time. So there's some strategies around that. If you're in a situation where you haven't filed your taxes for a couple of years, there are programs with the CRA called the voluntary disclosures to avoid penalties in late filing. So CRA in general wants to work with you. I think there's some misconception that CRA is very scary, mean. And no, actually, that's actually the opposite. They are very much interested. If you approach them with the right attitude, professionalism, you'll find that you'll also receive a lot of professionalism and them being helpful in trying to work out ways to get you caught up with your tax filings. A couple of tax considerations. I'm nearing the end before I get into financing. Capital gains inclusion, yes, 66%. Yes, unfortunately, it's a go. There is still a lot of talks about it. Do we advise clients to not employ the new 2/3 capital gains inclusion? No, it really depends. There's a lot of considerations to take a look at. Whether or not you want to go for it or not. And yeah, it's definitely a lot more talk outside of this presentation. Selling a business, there are ways to be able to do that, specifically to sell to employees. If your business is in trouble, there is an allowable business investment loss called an ABLE that you can employ, and there's rules for all of these ones. And you want to be able to affect that one properly, because it's a highly audited area of tax returns. Home buyers plan. Now you're able to withdraw $60,000. It used to be $35,000, but now you're able to withdraw up to $60,000 out of their RSP for home buyer plan. Interest-free loans, there's programs for up to $40,000 for retrofits. Canada Dental Care Plan for families, very important for families with total net incomes less than $90,000. And then there's a new one. If you're offering short-term rentals, you have to be very careful now for short-term rentals. And there are some deductions that are not allowed for certain situations. Lastly, I will talk a little bit about financing for the big leagues. It's important to know your numbers and have a business plan and have a proposal for what the lenders are looking for. And those are the same numbers and a lot of the figures that I've talked about early on with margins, gross margins, operating margins, and knowing your ratios, the quick asset list, liquidity, the current ratios, and those ones. Sources of investment or loans, I would say, is the major banks, WeBC for sure, private lenders and crowdfunding. All the loan lenders out there have different approaches and different customer types that they look for. Certainly speak to, it's a great start to speak to WeBC, because they also do offer consulting and those other services that come along with it. Banks, not so much. Like the big banks, the RBC, the CIBCs, I'm sure there are really good account managers there. It's good to find a good account manager, but I think you'll find more additional support from the organizations like WeBC. BBC is also one that it's out there. Other sources of lending, of course, are credit cards, private lenders, and also crowdfunding like Kickstarter and other avenues such as that. That's my time. I apologize for rushing through the last bit of slides. Certainly a lot of materials to go through. I thank you so much for your time, Cathy, and as well, Brandy, for having me today. I'll open it up for any questions.
Great. Thanks so much. We're going to stop sharing, or Chad, you're going to stop sharing your slides. Brandy will put up our slides. So yeah, we are really close to 10 o'clock, or 11 o'clock. So I know a lot of you have to get going. So I just wanted to make sure that everybody knew that if you have questions, you're going to receive an email from WeBC later today or tomorrow with Chad's contact information, our contact information at WeBC, and a copy of Chad's slide presentation. Somebody did ask about saving all the information in the chat, and unfortunately we can't do that, but yeah, we're just gonna have to have Chad back. We were saying we should have a part 1, a part 2, and part 3 because there's so much really vital information, and I really want to thank Chad for being with us today. Please take this opportunity to use him. Ask him a question, you know, like maybe make an appointment. I don't know what Chad charges an hour, but I'm sure there could be some sort of, you know, something worked out there for all of you with really important questions. So just quickly, I want to let everybody know that at WeBC, we're offering these SMART programs, which you work through on your own. You have 90 days to work through them. The topics are excellent. HR for small business. We all know how difficult it is to find people. Financial fitness, strategic marketing. They're just fabulous. You can find them on our website at we-bc.ca. I want to also let everybody know that we're going to do a short poll before we end today, just to kind of make sure that this is the kind of content that you're looking for, which is great. We have a session tomorrow on Procurement Canada, unlocking government opportunities, navigating federal programs and resources for business growth. We've got a Navigating PST webinar later in the month. And we've also got a fireside chat, a business owner's export journey for any of you considering exporting. So again, thank you so much. Please sign up for our e-blast. Please contact Chad or contact us with questions, queries, anything like that. And if you could participate in this poll, we would so appreciate it. We don't want to waste your time. You know, you're busy business women, and we want to make sure that the content is what you're looking for. Any comments that you can't put in the poll, send us an email at hello@we-bc.ca, and we'll definitely get back to you, and we'll pass the feedback on to the right people. So anyway, for any of you that have to go, thank you so much for being here today. We had a great crowd. We'll definitely have Chad back, and if you sign up for the e-blasts, you'll know about that. And otherwise, yeah, you can, I had a lot of people in the chat today saying, you know, find me on Instagram, you know, follow me on LinkedIn. Well, we're the same way at WeBC. We have all the social networks, and if you want to send us an email or friend us on or join us on Twitter or Instagram, we'd love that. So everybody, thanks
I'll
a
stick
lot,
around.
Chad.
I'll stick around for any questions.
Yeah, sure. We've got another probably 2 minutes, I think, until we're done. Yeah, but thank you very much, everybody, for being part of this today, and enjoy your day. Thank you. Bye.
No problem.
Hello, this is Michelle. Is Chad still there?
Chad is still there.
Still here.
Oh, hi.
Michelle.
Thank you, Cathy and Chad. I know the answer is it depends, of course, Chad. But is there a point in time in terms of when we look at the profit at the end of the year that you would suggest looking at incorporating? So when I've done the numbers before, it just, you know, with all of the administrative and the legal and the filing, it really didn't make a lot of difference for me at the end of the day, because I was trying to pay the rent, right? Not keep the money in the business. So is it 50 grand? Is it 100 grand? Is it $1 million when we should start looking at the benefits of incorporating?
Yeah,
Thank
yeah.
you.
From a tax point of view, not a problem. I think that's a great question, Michelle. From a tax point of view, it's that incorporating in the business allows you to defer the taxes. So yes, definitely. Let's say it is $1 million. You added $1 million. If you compared it on a sole proprietor or an incorporating, on if you earn that $1 million in the sole proprietor in that year, you're getting taxed at the highest tax rate, effectively about 45–50% on the highest tax rate. And then if it was in the corporation, yes, it's going to be at the higher tax rate because it's over above the small business deduction, but it's still lower than the personal tax rate that's available. So it's really about the timing of when you need that money too, because if it's in the corporation, after earning that $1 million and after paying the taxes, then you can slowly withdraw it. You can draw it down and you'll pay taxes personally on the amount that you take out as a salary or a dividend. On the sole proprietor side, you don't have that opportunity. It's the taxes was paid at that time and the money is yours all at once, all together. And so there is a consideration in terms of the total taxes. It is higher. Should it be a higher amount? Taking a look at your tax brackets. Is there an amount? I would say, yeah, I think maybe about $250,000. I think, yeah, and then definitely certainly higher than that. You know, like as you approach more than $250,000. The tax brackets at that point starts to get really punitive. Yeah, that's just from a tax side.
Yeah, that's fantastic. Thank you very much. Because most, some of us are involved in some contract work here and there, and the pricing is around, sole proprietor versus incorporated and all this blah, blah stuff. But, that gives me a total ballpark to say, let's not fuss until it's worth fussing.
Yeah.
Thank you.
Too. Could be, no problem. The other thing that I want to say about that is also taking a look at your other competitors and your customers. Some of your customers, they might be more comfortable just on a psychological thing that they only want to work with, incorporated, or maybe they don't. If they don't, fantastic. And if you're at a lower tax bracket and your customers and vendors are okay working with a sole prop business entity, fantastic. Keep it simple, because the costs to also incorporate and upkeep it annually, administratively, the tax filings, the T2 tax filings, and the legal renewals and things like that, they're at least double the amount of the administrative cost of a sole proprietor.
Chad, I think
that's exactly right. So thank you for that. That was great. And putting the psychological, emotional impact of are you sole proprietor or incorporated. Thank you, Chad, for going that next step. Brilliant.
No problem.
I think Celia has a question, Chad, if you have another moment.
Yeah, absolutely.
Hi, Chad. Thank you so much. It was very interesting. I have more of a question regarding like sort of timeline and the way we should work with our accountants. So we've done our bookkeeping for the year, and we're going to submit all of the information to our accountant. But I'm wondering, should I get an appointment with my accountant to review all the different tax strategies that you talked about before they filled in the tax? Because I always found it's like difficult for me to understand what's the sort of like job of the accountant versus the bookkeeper in terms of like optimizing our tax. We have an incorporation, and yeah, so I'm always a bit confused on.
No problem. I think I think you have two parts to that question. I'll address the first part of the bookkeepers and also accountants. The accountants typically are the ones that are typically tax filers, and bookkeepers are typically the ones that put together the numbers and reconcile it to the bank account. There are also bookkeepers out there that are tax filers too. There's no requirement that you have to be an accountant, then you can file taxes. There's no requirement or legal requirement of that like that in Canada. Anybody can file taxes actually. That could be good and bad because there may be some bookkeepers who may not be that versed in income taxes, but they can still file it if it's really straightforward. So I don't want to knock bookkeepers. But typically bookkeepers, you'll find they put together the numbers, you give them the information, the bank statements, all the receipts, they put together numbers typically. Then typically accountants like CPA firms are the ones that are taking a look at all the numbers and applying certain, all the tax rules available to then the file with the CRA. And also they provide other services too, as well as planning, cash flow planning, budgetary planning, financing matters, and many more in specialized areas. The other thing to look out for in terms of accountants is that, yes, there are some accountants who are just tax filers. And they're kind of like the doctor, you know, you give them the information and they file their taxes and they give you a bill and thank you so much, we'll see you next year. So there does require a responsibility from owners to kind of hear about what's happening out there and also speak to your accountant about, hey, I heard about this. Because unfortunately, as tax practitioners, in Canada, our rules, they need an overhaul. And there's lots to speak about. There's layers upon layers of new things that are coming out. And it's very hard for accountants to be able to talk about them, every specific things. We try to, as an organization, bring some of the most pressing matters to our customer base and bring it up and to see if it applies for them and to see if they want to talk about it. But I certainly would ask business owners to say, hey, you know, I heard about this or something like that. Does it apply to us? And bring it to the accountant and see if this is what they've seen or what they've read about, and see if they can also apply it and advise you on that.
And so in terms of like good practices, should we meet like often with an accountant? Or because I found it seems to be always like that one time per year when we give the paper and we're like, hey, actually, why did you feel this way, these things, you know, because it's not optimized regarding our situation. So I'm just curious to know if asking more follow-up through the year would help.
Absolutely. Absolutely. What I say to my clients is that when there's a big life event happening, and also a big a business event that's happening too, for the life events, it's like purchasing a house, you know, or having kids, and the savings for them. For the business event, it's like, you know, I'm thinking about purchasing more vehicles. Should I lease it or should I finance it? I'm thinking about, let's say, selling the business or buying another business. I'm thinking about bringing on 5 more staff. And think about also speaking to them outside of tax time. So outside of tax time is great from, let's say, July to like, you know, October, November time. If those are months that are also slower for you, yeah, reach out to your accountant and kind of let them know, hey, these are some of the things that we're thinking of doing for the next 6 months, 12 months. Or these are some of the big decisions that we have coming up. How do you advise us to go about it?
Thank you so much.
No problem.
Thank you so much, Chad. I think that's great. I'm sure we could keep going for another 20 minutes with people's questions, but I'm going to invite anybody else who has any questions to reach out to Chad directly, and we'll make sure that you get that information in the follow-up email. So thank you everyone so much for joining us today. And thank you, Chad, for taking the time. We really appreciate it.
Thank you so much for having me, Brandy. Have a great one, everybody.
Yes. Bye, everyone.